There's just uncertainty out there, all kinds of geopolitical risks, maybe the market uncertainty. So people are just buying gold as a hedge, right? I mean, in a way, they're right. It is a hedge, but it's not a hedge against geopolitical uncertainty. It's a hedge against inflation. That's what everybody is hedging. That's what central banks are hedging. They're hedging their dollar reserves. In fact, they're getting out of their dollar reserves. They're also lightening up on euros and pounds and yen. You know, part of what's masking this problem is the relative strength in the dollar. And I say relative because the dollar is actually weak. Gold tells you what's actually happening. Gold today hit a new all-time record high in every single currency. Now, relative to other currencies, the dollar index was up today. But that doesn't mean the dollar was up. Gold tells you the dollar was down. What the rising dollar index tells you in an environment of a rising gold price is that the dollar is losing value. It's just losing less value than the euro, or losing its value more slowly than the euro or the pound or the yen. That's what's happening.
In this analysis, renowned economist Peter Schiff sounds the alarm on the current state of the economy. Despite gold hitting record highs in every currency, mainstream media remains eerily silent. Schiff warns that the dollar's relative strength is masking its true weakness, pointing to a looming inflationary crisis. With central banks hedging against inflation and the dollar's reserve status in jeopardy, Schiff urges viewers to pay attention and take action.
This is what I have been predicting and preparing for since they started calling me Dr. Doom, since I wrote my first book, Crash Proof, back in 2007. But I want to start off by talking about gold and silver and what they did on the week and today. But also, more importantly, what this move means and why no one seems to care. The mainstream media, the financial media, is not even paying attention to it, just completely ignoring not only what's happening in the precious metals market, as they have been for the entire rally, but not even questioning the significance of what's going on here. You know, I've talked about gold, you know, it's yellow like the canary, and in a way it's a canary in the economic coal mine, in the monetary coal mine. You know, I wrote about that in Crash Proof, because even back then the price of gold was going up, and nobody seemed to care. And then we had the financial crisis. And an analogy I used back then in my book was, it's like you've got this canary. You know, the miners bring the canary in the coal mine because if there's any gas in there, the canary dies first. And so if the canary drops dead, you get the hell out of the mine, right? That's your early warning sign, right? Maybe it seems a little bit barbaric, right? You're sacrificing this canary, but better the bird, than a human being, right? So he comes in as the sacrificial, not lamb, but bird. Well, gold back then, gold died, signaling that there's a big problem for the markets, but nobody cared, and they would, kind of rationalize explanations as to why the canary died. Well, maybe he was just sick. Maybe he died. Maybe he had a heart attack, trying to come up with other excuses and not admitting that there's something wrong in the mind and that you should get out. And really, that's what's going on now, because to the extent that the media even acknowledges that gold's gone up, because in most cases, they don't even bother covering it. But, you can find some stories in the internet. You could Google gold and you can see some stories that mention it made a record high. But all of it is explaining it from a geopolitical perspective. Oh, because of the Ukraine, or because of Israel, or whatever it is, that's why people are buying gold. There's just uncertainty out there, all kinds of geopolitical risks, maybe the market uncertainty. So people are just buying gold as a hedge, right? I mean, in a way, they're right. It is a hedge, but it's not a hedge against geopolitical uncertainty. It's a hedge against inflation. That's what everybody is hedging. That's what central banks are hedging. They're hedging their dollar reserves. In fact, they're getting out of their dollar reserves. They're also lightening up on euros and pounds and yen. You know, part of what's masking this problem is the relative strength in the dollar. And I say relative because the dollar is actually weak. Gold tells you what's actually happening. Gold today hit a new all-time record high in every single currency. Now, relative to other currencies, the dollar index was up today. But that doesn't mean the dollar was up. Gold tells you the dollar was down. What the rising dollar index tells you in an environment of a rising gold price is that the dollar is losing value. It's just losing less value than the euro, or losing its value more slowly than the euro or the pound or the yen. That's what's happening. I mean, if I'm going backwards at 10 miles an hour and there's a car next to me going backwards at 20 miles an hour, relative to that car, I'm going forwards. But I'm not. I'm actually going backwards. I'm just going backwards more slowly than the other car. And so we don't have a strong dollar. We have a weak dollar. It's just that temporarily the dollar is less weak than these other currencies. But the key, the operative word is temporarily. The dollar is ultimately going to get a lot weaker because of the unique problem that we have with the reserve status of the dollar, which is in jeopardy, and the phony economy that we've built on top of it. You know, ironically, I was reading about a critique given by Ben Bernanke about the Bank of England and all the mistakes that they made, how they got their forecasts wrong and their policies were wrong. And I thought that was very rich, you know, coming from Ben Bernanke, because he made all the same mistakes as the Bank of England. It's just that he got away with it because he had the benefit of printing the world's reserve currency. The Bank of England didn't have that crutch to lie on. So yes, Bernanke made all the same mistakes that he was criticizing, his fellow central bankers for making, but he got away with it because he had that, that crutch, get out of jail free card, whatever, that other central banks didn't have. And so the negative consequences of their mistakes manifest themselves much quicker than the manifestation of the mistakes that Bernanke made, because they were kind of covered up by the dollar status and the fact that everybody just bought dollars. I mean, no matter how many we printed, no matter how low our rates were, money was just flowing into the dollar by virtue of its unique position that it really doesn't deserve, but that it had.
Continuing the discussion, Peter Schiff sheds light on the curious silence surrounding gold's historic surge, reaching all-time highs above $2,400. Despite its significance as an inflation hedge, mainstream financial media remains strangely mum on the matter. Schiff points out the glaring omission during CNBC's Squawk Box broadcast, where gold's record-breaking rally goes entirely unmentioned over a 3-hour span. With gold serving as a vital indicator of economic health and inflation concerns, Schiff's observations raise critical questions about the media's coverage and the broader implications for investors.
But anyway, so gold, I woke up this morning and the gold price was up about $30, $40, all-time record highs at the time. We're trading just above 2,400. I mean, 2,400 was kind of like resistance all night. It didn't really move above 2,400 until just a bit before the U.S. stock market opened. But it was really trying to get above that level. And silver was up to 50, 60, 70 cents. And the interesting thing is, I'm watching this show, Squawk Box, on CNBC. And it's a 3-hour show that runs from 6 in the morning, New York time, to 9, right? So pre-market, they're supposed to be talking about all the relative things that happened in the markets overnight. and what's going on pre-market, because it's all before the opening bell. So they're supposed to talk about all the important news. Now, I can think of what could be more important, right? Here it is. You're a 6 a.m., 7 a.m. show. Stock market hasn't opened for yet, but the gold market's open. Gold's at an all-time record high, a string of all-time record highs. Silver is popping. You would think that that's the big story of the morning, especially if you understand, what this means, and I'll get into that. But you think they'd mention it. So I'm watching the first hour goes by. They don't even mention it. I mean, they bring up some quotes. They talk about where the S&P futures are, the Dow futures, where the bonds are trading, dollar. Didn't mention gold. Whole hour goes by. They didn't even mention it. Hour 2, no mention of gold. I mean, you can see the ticker going by, right? They didn't erase it from their ticker, right? I mean, maybe that's the next thing they do. They don't talk about it at all in the second hour. Not even just in passing. And then the third hour comes up and they announce, next up, we're going to talk about inflation and the inflation problem. But they say, oh, okay, now they're going to talk about gold, right? Because they're going to talk about inflation. Well, they do an entire segment on inflation. Nobody mentions gold or the fact that it's a record high, when gold is a hedge against inflation. It's a sign of inflation. Again, like I said, with the canary in the coal mine, instead of recognizing, gee, gold's going up because of inflation, they're making up other reasons for why gold's going up, right? Like the canary died of a heart attack, right? Gold's going up because of geopolitical risks. They don't want to admit that gold's going up because of inflation, because the Fed is making a mistake, because these rate cuts are wrong, because they should be hiking rates. So they do this whole segment on inflation, and they don't even mention gold. Then they segue to the next segment on like what to invest in, right? If inflation is higher than we thought, what should we invest in? I'm thinking, okay, now surely they're going to talk about gold and silver. They're going to talk about gold stocks. They did a whole segment on investing with inflation, and nobody mentioned gold or silver or the mining stocks. They mentioned the Magnificent Seven. That's all they could think of. Talk about tunnel vision. So the entire 3 hours goes by. Not a single mention, let alone a discussion. They don't even mention gold.
In today's discussion, Peter Schiff highlights the alarming disconnect between gold's record-breaking surge and the silence of mainstream financial media. Despite gold hitting all-time highs above $2,400, media outlets like CNBC's Squawk Box fail to acknowledge its significance, opting instead to overlook the vital signals it sends about inflation and economic health. Schiff's insights shed light on the importance of paying attention to gold as an indicator of underlying economic conditions. We thank you for joining us today and encourage you to subscribe for more insightful discussions.